Hi traders, this is Cynthia of Day Trade Forex bringing you a video to introduce you to the new Pro Currency Strength Meter template that has a lot of extra indicators and some of my favorite Fibonacci indicators on the Pro template. So I'm going to introduce you to these extra indicators and show you how we use the currency strength meter in conjunction with the different indicators on the Pro template. Now, I have to admit that this template is really advanced and it's not for newbie Forex traders at all. So I wouldn't really get too excited about this if you're a newbie trader, but if you're an intermediate or advanced trader, I think that you're going to enjoy and appreciate some of the special indicators on this Pro template. First of all, I want to point out that this currency strength meter is showing you the current strength and weaknesses of the 8 currencies. The reason why we use it is to help us determine what currency pair to go look at to trade. That could be a trade opportunity so that we don't have to search through the 28 currency pairs available to us. So this makes finding and identifying almost immediately at a glance what currency pairs you should go look at. And in my previous video, I mentioned that the color coding for the currency strength meter is pretty simple to use. Right now, there's not a lot of extreme colors or extreme values. An extreme value would be a blue, which is the weakest color there is, and a red, which is the strongest color. And in between you have the orange and the yellow. Now the yellow is considered weak and not as weak as blue, but still very weak. And the orange is considered strong, but not as strong as red. So what we want to do is identify the weakest ones and the strongest ones and pair them up. So now we can see the New Zealand dollar just turned red, is fluctuating between a strong orange and a very strong extreme red. And our first chart is the New Zealand dollar, and I start my trading day by putting up a bunch of pairs that I actually like to trade, but I start looking at everything in the daily chart. That's what's very important here, is look at everything first in a daily chart. You need to get perspective on where price is on a daily basis to start your trading session. So I like to know if it's been oversold or overbought or somewhere in the middle. Now we're looking at the New Zealand dollar, and this is my Fibonacci heat map, which is one of my favorite Fibonacci indicators. And it's showing you the blue oversold zone and the red overbought zone, but the New Zealand dollar pair is somewhere in the middle, but it's coming off of being oversold. So right now, the New Zealand dollar today, so far today, has been a very strong New Zealand versus a very, well, fairly weak US dollar. So that means the New Zealand versus the US dollar has been going up. And you can see here today we have sort of a doji green candle, and the price has been back here several days ago hitting support, but basically the trend is up because the price is still above the green support channel line. So we can see that the New Zealand US dollar is in an uptrend, and if you look at the RSI right here, this was Friday, end of this last week, and the RSI was very strong up at the 70 and 80, but it's turned red. So that means momentum has died off. So you can see on these 2 days, this was Thursday, this was Friday, price really reached a very high point. And we have the Fibonacci support and resistance here, which are pretty tight together because the momentum is not very strong and the range really is not very wide. So the Fibonacci resistance lines reflect that the range and the momentum is just not very strong. This is not really, for me, a fun pair to trade, but I just want to illustrate to you because it happens to be one of the stronger pairs today. The New Zealand dollar is one of the stronger currencies today. And now you can see the US dollar has strengthened. So they're almost identical. They're only 1 point apart. So that means the price would be flat. And you can see the doji candle here. The price definitely is flat. The weakest pair is the pound and the CAD. So you would want to pair up a weak with a strong. So the pound being very weak, we could go look at the New Zealand dollar pair, the combination, you pair up a weak with a strong, or we could look at the pound Aussie. So we don't have down here the pound New Zealand dollar, so I'm going to show you a trick here that you can do. If you want to change your chart without having to create a new chart, just scroll down until you find your pair, and here it is. And if you want to move it up a little bit to where it's easier to find, just drag it and move it up. Now it's up towards the top. So you can change this chart just by clicking on the pair that you're interested in looking at and drag it over onto the chart. And now this has changed to the pound New Zealand in a daily chart. You can see how the pound New Zealand has actually been in a downtrend for over a week. This is a daily chart and it's approaching being oversold, and the RSI is very low under the 20 line. So it's oversold, but it's not as oversold as it can be. But it is strongly on the downtrend. And you can see that the pound is weak at 2.0 and the New Zealand dollar is strong at 6.0. So what we do is we sell the weak currency, and we know that when we're trading pairs, you're selling one and buying the other one. So in this instance, we're selling the pound currency and buying the New Zealand dollar because we sell the weakness and we buy the strength. That means that we're selling the pound New Zealand dollar, and it's been on a downtrend for a long time. But keep in mind that the currency strength meter is only for showing immediate strength and weakness. So really what you see here has nothing to do with the past. Plus it has nothing to do with the time frame that you're looking at. So I'm on a daily chart, but the currency strength meter has nothing to do with the time frame for the chart, and it has nothing to do with the past. It's showing exactly what's happening right now. So if we want to jump down, we can see that we have the Fibonacci support and resistance, and it's sitting just right below support 3, so it's fallen off quite a bit. The RSI is very oversold, and we're coming off overbought in the 4-hour chart. In a 1-hour chart, it was sort of in the middle. It had come off oversold and had gone up for a couple of weeks. Well, that's about a week, and this is about a week on the way down. So we're seeing just a little bit of a reversal of trend, and even though we're approaching oversold in the daily chart, in the 4-hour chart, we're coming off being overbought. And those are the major trends, and that gives you some perspective of, is the pound overbought or is it oversold? Here's the oversold zone, so it's kind of approaching being oversold. However, the RSI is very, very low, very weak. Momentum has really dropped off, so it's possible that it's sitting on support 3 and you have a little doji candle for the 4-hour candle. It's very possible that maybe it's found a temporary bottom or even a permanent bottom and might start going up, but we cannot predict. We can only see what's happening right now. So if we take a look at the pound New Zealand in the 1 hour chart, we can see that it's been very oversold in the 1 hour chart, and now we have a long-tailed doji, which indicates a pause in price. It doesn't always indicate a reversal. It just says that the market doesn't know if it wants to buy or sell. And a lot of sellers pushed the price down, but now the body, you have what's called a long-tail doji. So price is starting to push up again. RSI is very flat and very oversold. So everything in a 1 hour chart is very oversold. So in a 30-minute chart, it's also oversold, but you can see the strong candle and the RSI is turned green. So it's possible it's found the bottom, at least for today. So if we look at a 15-minute chart, the price is starting to push up off the bottom again. And because it's so oversold, the big price movement has already happened. This is where it started. We're in a 15-minute chart, which is, you can't see the long-term trend, but you can see just very recent trend, and this is where it really sold off. However, it sold off here too, but we had a retracement and then it pushed again to the downside. So this is how I analyze my charts. And when I woke up this morning, the New Zealand dollar was even stronger than this. It was a red 7, and the pound was like a blue 1.0, even went weaker than that. And that tells me that the big push to the downside, people have been selling the pound and buying the New Zealand dollar because the pound is weak. So they're selling the weak currency and they're buying the strong currency, but the big move was already over. You can see that the big move is already over. So for me, this is an untradable pair unless I watch the retracements in the 15 and 5-minute chart. If I can see that it climbs back up to this Fibonacci swing level and then starts to come down again, I'll consider another sell entry. But I want to show you how to use the crosshairs to determine, say that it pushed up to the Fibonacci swing level here and then starts to come down. Considering your spread, this is another Fibonacci line here. Let's see how many pips we could gain if it went down to the bottom where it already hit. That's 73 pips. So that's a pretty long drop, but it needs to retrace probably just a little bit more, because if it just turns around right here and wants to go down again, your range is half. So at the very most, maybe you could get 20 pips scalping it if this retracement of this downtrend, this is a retracement, if the downtrend resumes, maybe you can scalp 20 pips out of it. But the big moves already happened, so it's pretty risky to try and jump in either way, buying or selling at the end of a big trend. It's somewhere in the middle of the trend, it's not so risky, but it's already 10 a.m. and we have right here, the Forex Factory calendar headline says in 6 minutes we're having a red USD news alert. So a lot of the pairs are just not moving right now. They're sort of holding their breath waiting for this news event. Now the pound US dollar on a daily chart has been very oversold, and it was very oversold through here, but then it started to go back up. You can see the Fibonacci support and resistance lines are pretty close together in a daily chart, and that's pretty normal. But we have a big red arrow and the price is actually pushed below the green support line, and the RSI is red and turned down below the 50% level. So now we know that the pound is on its way down again, and look at the pound at this moment in time on this candle, this daily candle. We're seeing that the pound is very weak. It's a blue 1.8, now it's 1.5, so it's weakening even more. And in conjunction with the US dollar, which is fairly strong here at 6.0, so people are selling the pound and buying the US dollar, and that makes the pair go down. So I hope by now that makes sense to you, that we sell the weak currency and at the same time buy the strong currency. But this is the base pair. The pound is the base pair, and the US dollar is the cross pair for this chart. So people are selling the base pair but buying the cross pair, which is stronger. So the pound US dollar is going down. And if we look at on a 4-hour chart, we can see that in a 4-hour chart it's been in the overbought territory for quite a while. This is where it hit the peak, and now it's been coming down. The range this is the range, so you need to get in the habit of using your crosshairs and seeing what the range is. That's a 70 pip range. If you look at the swing, this blue line is the Fibonacci pivot line, and you see where it's hit right now. That's 100 pips almost. So it's come down very strongly in these 3 candles here. These are 4-hour candles, so the price is really pushed low during the end of the London session and beginning of the US session. So during the US session, the US dollar has been strengthening, and that's important if you're going to trade gold or any of the US indices. New Zealand yen daily. The New Zealand and the yen are very similar in color and only a few points apart. So at this point on the daily chart, the price is flat. It's had a nice climb up. That means the New Zealand dollar has been stronger versus the yen. But at this point in time, we can see on a daily chart the price is halfway between the red overbought area and the blue oversold area. So the price is right in the middle of overbought and oversold. So it's not very interesting. You can always jump down to the lower time frames to get more of a clue. You can see that in the 4-hour time frame, the Fibonacci support and resistance lines are very squished together, and that reflects these past 4-hour candles where the price action was not very strong. The movement in the range was very weak, so it's not showing much action here. The euro US dollar on a daily chart has been oversold for many days. It's tried to push up. Here is where it really tried to push up, but it failed. And here was another attempt to push up, but now it's failing again. So the euro is very weak. You can see it yellow 3.0 versus the dollar, which is very strong, orange around 6.0. So people are selling the euro and buying the dollar. The dollar is very strong and the euro is very weak. So the pair, the euro US dollar pair, has been going down, and it's been an oversold area for a long time. And if we look at 4-hour chart, it's right in the middle between the red overbought zone and the blue oversold zone, and the support and resistance lines are a little bit further apart. So it's showing on a 4-hour chart, you can see more activity. You can actually see that there's been some activity. This was your sell entry right here, coming down out of the overbought area, and this was your sell. You have a hot dot signaling a sell, and then the arrow appears, but then it retraces but comes down. So it's not coming down really strong. It's just kind of finding its way down in a 4-hour chart. And 1-hour chart, you can see again it's somewhere in the middle between being overbought and oversold. And right now we have a little doji candle. So the euro for the morning anyway is sitting on a doji. That means the price is paused. Buyers and sellers are undecided whether to buy or sell. They don't really know if it's going to go lower or if it's going to go higher. That's nothing at this point, at this time of day at 10 a.m. Eastern that I want to look at. Now we have 2 minutes since the USD, so the US, the ISM read economic news event for the US economy, and the dollar is very strong. It's orange 6.0 average, and that's fairly strong. And the euro is weak, the pound is really weak, and these are a little bit more on the strong side. So now let's look at the euro Aussie daily. The euro is weak, the Aussie is strong, so the euro Aussie pair has been going down. They're selling the weak currency and buying the strong currency. So the pair has been going down for the day, and you can see we do have a really long red candle, and the body is somewhere in the middle, and the RSI has turned green a little bit, so it shows possible interest in buying, but it's right in the middle of the overbought and oversold zone, so it's a little bit indeterminate. If you look at the 4-hour chart, you see that it's very oversold in the 4-hour chart. So usually I would not consider selling down at the bottom of a blue Fibonacci oversold zone, because that would possibly would be selling at the bottom, and we don't want to sell at the bottom and we don't want to buy at the top. So these Fibonacci zones, oversold and overbought, give you a clue of where the price is in relation to where it's been. I think that's very important to know that. Here's the Euro odd in a 1-hour chart. This is where the big sell-off started, and you can see now it's just kind of in a consolidation. Let's use the crosshairs and check the channel. It's 32 pip channel, so that's in consolidation. The channel is not very wide, and here's the big drop off. I like using the 30-minute chart for entries because you can really see the trend in a 30-minute chart. That's the lowest time frame I think that you can see the major trend in action. And so you had a nice sell-off. That was a nice candle here. Actually, the sell started right here when the candle broke through the green support line, and so in an hour and a half it pushed 107 pips down. So that was a really strong sell-off, but now it's just in consolidation. The pound yen, this is one of my favorite pairs to trade. On a daily chart, we have a red arrow and a red candle, and RSI is broken through the 50% level and sloped down in red. So we haven't, on a daily chart, haven't quite broken through the green support. But if you don't want to wait and lose a nice entry, now you can see on a 4-hour chart it's pretty oversold, so I would not consider selling at this point, although it's in red overbought territory. On a 1-hour chart, the sell-off started back here and it's racing down to the blue oversold, and the RSI is very oversold. So the pound is very, very weak and the yen is very, very strong. At this point, you could say that, you know, the major part of the downtrend has already happened. So what I would do if I'm interested in trading this later in the day, I would jump down to the 30-minute chart to see where in the oversold territory it is. But what I would be looking for would be a retracement. This, as an example, this was the beginning of the big downtrend push coming off of overbought. Then you have two 30-minute candles that are retracement candles. They've turned green, and then the downtrend resumes. So that's what I would be looking for. Here you had another slight retracement and then downtrend, but you can see it a little more clearly. You have to drop down to 15-minute and 5-minute. So here's the 15-minute chart. You had a nice drop, a couple of little stalled doji candles, and then another re-entry to the downside, and here was a little pullback and another re-entry right now. So it's got the hot dot but the RSI is green. It's oversold, but it's green. So I would watch this in a 5 minute. Really see the retracements in the 5 minute. And if you're looking for a good entry on an established trend that actually is somewhere already, possibly has hit the end of the trend, because there is such a thing as trend exhaustion, and you can't see the trend exhaustion in the lower faster time frames, but I use the lower faster time frames for seeing the retracements and getting a new entry. Here was the big, in a 5 minute chart, the big sell-off happened over here with the red arrow coming out of the overbought zone, the red zone. And here was this another, here's a hot dot for a re-entry, and then you have a lot of consolidation, but then you get another hot dot and a red arrow, and then another hot dot. So after this bit of consolidation, this would have, when the candle broke through the black support line, you could have sold. That would have been a great little sell, and then a pullback at another sell. And right now, actually, it's at the bottom, but look, it's sitting on some Fibonacci support 1, but it knows it's on a downtrend, so it gives you all of these other Fibonacci targets right here, and the support is right here. So use your crosshairs and see if we were to enter short here. That's a 38 pip, 39 pip move down to support 2, and that could be a worthwhile target. And if it were to drop any lower, the third support is 113 pips away. But I would not even consider selling this until we see a green candle and a pullback and then a resumption to the downside. So that's how you play the retracements. It's sitting on support 1. It could break through and hit any of these Fibonacci targets, but personally, the RSI is so oversold, even on a 5 minute chart, that for me, I would wait to see that the candle turn green and the price pulls back, at least back to the top of this Fibonacci oversold zone area, and the RSI needs to pull back above the 50 RSI line. And then if the price starts to go down again, when the RSI turns red again and goes past the 50% level, then that means this green candle would have been up here and it would be coming down again. Now that's getting a better entry than buying right now when it's sitting on support and the RSI is really oversold. So I would wait. This is how you watch and wait for pullbacks in a 5 minute chart. You have to wait for a pullback. You cannot sell when everything is so oversold, because you could be selling at the bottom. And even if the price started to go back up again, it could be the absolute end of this long downtrend, and it could be that the pound starts strengthening against the yen. But it would have to be a pretty strong move up, and you'd have to be watching this in the higher time frames to see if you've actually hit the bottom. You can't tell really in a 5 minute or 15 minute chart if you've hit the bottom. I only use 5 minute and 15 minute charts, even sometimes a 1 minute chart, for watching the retracements and getting a better entry when I know that the price is still burning through a trend and not nearing exhaustion. Now here you can see the pound is really weak and the yen is really strong, so it's pushing further. The RSI can stay in oversold area or overbought area for a long time. Here you can see the RSI stayed in an overbought area for a while. Here it stayed in an oversold area for a while. Sometimes there's a sharp reversal, but it's so oversold that I would have to watch the 5 minute chart to watch for a retracement before I would ever consider selling this, because it's could be the trend is exhausted. The big move is already over. So let's see, here's the euro yen. The euro is yellow weak, and the yen is orange strong, so people today are selling the euro yen, and you can see that confirmed by a big, well, that's a pretty small red candle actually, and the RSI is turned red. It's somewhere towards the bottom of being oversold. It's not really in the middle, and the Fibonacci resistance and support lines are squished together, but that's pretty normal for a daily chart. Here's a 4-hour chart. You can see a little bit better. It's right in the middle of overbought and oversold, and it's coming down. The RSI is pushed in the last two 4-hour candles. It pushed below the 50 RSI line, so price is coming down on this. The euro and the yen, look at how the yen really just strengthened. So it's possible that this is still tradable even this time of day, but you don't know until you go look at the lower time frame. So in a 1-hour time frame, it's coming right out of overbought territory, and the RSI turned down an hour ago off the 50 RSI line. In a 30-minute chart, it's coming out of overbought, and you had the red arrow, price crossed below the green support, the RSI is turned down. It's sitting on support 1, so it could still be on the way down, but we don't know, and we can't really get a good entry unless we drop down to a 15-minute chart. And you can see in a 15-minute chart, it's still sitting just right past support 1. It's on its way down to support 2. So this possibly would be an entry I would be interested in. This is a 5-minute chart, and it's at the bottom of the oversold, and the RSI is very oversold. So at this point, I would like to see a retracement, and then if it goes down again, I would enter after the retracement is over. So I'm going to watch this green candle. It's a doji at this point, so it doesn't know if it wants to go higher or lower at this point. If it pushes down within the next 3 minutes or at the beginning of the next 5-minute candle, I could sell, because it shows in a 5-minute chart continuing sell strength. The euro, I would keep my eye on the euro here to see if it's strengthening. I don't want the euro to strengthen if I'm going to be selling the euro yen. I want the euro to get weaker, because then I know that it's going to push further low. So the yen, and if you look at the yen, you want it to stay strong. It's still fairly strong, but you don't want the yen to weaken, because then this is not going to push any lower. You want the euro to weaken and the yen to get stronger or stay strong. So if I see the euro keep weakening, however, like I said, I would like to see some kind of pullback. Ideally, I would like to see a pullback at least back up to support 1, which actually would act as resistance, because at this point support becomes resistance. And then if the price starts coming down, then I would consider jumping in for a sell trade. But let's use our crosshairs and measure the distance between support 1 and support 2, because that would be our target. I don't see any other targets other than this other Fibonacci support 3, but that's not a very big target, so that's not 10 pips at the most. So I don't know. Every time you put on a new trade, you're risking something again. So that's why scalping, I think, is so difficult, because you have to have a really high win rate, because if your target's only 10 pips, you're putting on a brand new risk to gain what, 10 pips? That doesn't really make a lot of sense, especially depending on the time of day when you're trading, when the trends could be exhausted. And the only way you could possibly scalp 10 pips is if you know how to watch the retracements in the 5-minute chart. So we're watching the retracement here. If it pulls back up maybe to the top of the blue zone and then starts to come down, I would consider scalping for 10 pips. And that means that with my new buy and sell and close button, I would have to choose what's called a quick scalp setting. This is if you open it up and you click load, you would click quick scalp. And then you take a look at the settings. We're using trade management true, and the first take profit now it says 100, but that's actually 10 points, 10 pips, because you have all of these numbers have an extra zero on the end, and that's to accommodate the CFDs or the indices. So first take profit would be 10 pips, and that's basically, we measured our range from support 1 to support 2, that's 10 pips. So once it hits 10 pips, it's going to close half of your trade, half of your lot size, and book 50% profit. It's going to book half of your trade or your lot size. So you need to make sure that you're using a micro broker that allows 0.01 micro trade lot size. That's the smallest lot size for a micro account, because if it's going to book half of your lot size, you need to have at least a 0.02 trade to start with, and the risk percent of the account balance is default 2%, which for most accounts will give you a 0.02, and that's what you need to do. Depending on your size account, you need to adjust your risk percent, maybe increase it to 3% or 4% or even 5%. Your risk percent has to be higher if your account balance is lower. So as your account balance is smaller, you have to increase your risk percent so that you can get at least a 0.02 lot size when you place your trade, so that it can book half of it, and then it would leave you with a 0.01. It would book 0.01 micro lot, and then it would leave you with an open trade of 0.01. I hope that makes sense. And then it's going to lock in 8 pips, and it's going to trail behind the 8 pips. It's going to trail 5 pips, and it's going to, every time it moves 1 pip in the proper direction, is going to move your trail up by 1 pip. So this is a very tight quick scalp setting, and it's for when you've used your crosshairs and you know that your target is only 10 pips. So the crosshairs becomes very, very important. Say here's the price right here, and now our support 2 is only 4 pips, so that's not worth scalping. However, if you made support 3 your target, from here to here, that's 20 pips, so that's a worthwhile target. But because the trend possibly is exhausted, you don't know if it's ever going to get down that low. And the only way you can know if the trend is exhausted is maybe to jump up to a 1-hour chart or a 30-minute chart. Now, in a 1-hour chart, it's coming out of overbought, so it's still pushing down. Support 3 would be your target. In a 30-minute chart, it's pushing down very strongly, and again, support 3 could be your target. So it's very possible that if the euro stays weak and the yen stays strong, it could hit this support 3 target, which is 20 pips. You can see that the Fibonacci support and resistance is synchronized between the different time frames. So it doesn't matter what time frame you're looking at, you're going to have the same values between the Fibonacci support and resistance lines. So at the very best, you could have a 20 pip trade out of this if you decided to place your trade. And the pound is still very weak and the yen is still very strong, but you have to watch the pullback in the 5-minute chart. And if the 5-minute chart looks stalled out, like we have 2 dojis here, so the price is stalled, RSI is pretty oversold, again, I would not consider selling this unless I see some kind of pullback at least to support 1, which becomes resistance at that point. And you can see your red channel line is sitting right on support 1. So I would need to see a pullback and then a resumption to the downside with the RSI pulling back at least to 50%, being green, and then turning red and going down again. And then that would be a possible reentry with support 3 being your target. If it pulls back to this support 1 and your target is support 3, that's an extra 10 pips almost as a target. So, but this time of day is probably not going to be a very strong move, and because it's late in the morning, it's already 10:30 a.m. The London session is almost over, although this is a good time to be trading because look at how the pound is just so weak and the yen is so strong. But these are extreme values. Blue is extreme, red is extreme, so this pair has had an extreme move, and you can see it sitting on support too. So again, you just have to watch this you can also watch it in a 1-minute chart. I do that a lot. It's at the bottom of the 1-minute chart, so if it pulls back to support 1 and then starts coming down in a 1-minute chart, you can click sell. And when you click sell, it's one click and it will place your stop and take profit at a risk to reward ratio of 1 to 2. So your risk would be 1 and your reward would be 2, which is double. So it places your stop and take profit lines directly on your chart and with your broker. And these lines, of course, are adjustable on your chart. You can increase your stop or increase your take profit. You can make your risk to reward 1 to 3, which means you would pull your take profit line higher or lower depending on if you're buying or selling. You could drag your take profit line directly on your chart and increase your reward. And very rarely do I lessen my risk unless I know that I'm at the beginning of a very, very strong trend, and you don't know that. You can't see that in a 1-minute, 5-minute, 15-minute chart. Those are scalping time frames. But if I want a smaller risk, I have to be at the beginning of a trend, which means looking at the trend at least in the 30-minute chart, if not the 1-hour chart. So I think that this has the potential to get down to support 3 if the pound stays as weak as it is and the yen stays as strong as it is. And it could happen in the next couple of hours. This is the ending of the London trading session, so a lot of momentum and volatility and pressure will not be in the market anymore. It's just going to be the US session. So I think that it's possible that this could meander down for the rest of the afternoon and hit support 3. But again, unless I'm watching it in a 5-minute and 1-minute chart for the retracements, I can't take the chance of selling at the bottom, not knowing how long it's going to take to get down to from here to here. That's 19-20 pips. It's not worth it to sell at the bottom possibly, unless I see a retracement and then it starts to come back down again. So that's how I analyze my charts. Oh, let's look at the pound odd. That's one of my favorite ones. This is a daily pound odd because the pound is very weak and the odd is fairly strong. This is strong but not extremely strong. Red is extremely strong. Orange is fairly strong. So people are selling the pound and buying the Aussie dollar. So this means that this currency pair has been going down, and you can see in a daily chart it's been going down for several days and it's down very strong here. I was playing it. I traded this morning. And so let's jump down to a 4-hour chart, and is where the big downtrend started again after some pullback. It had a nice downtrend and a 4-hour chart, then some consolidation, some pullback, and the downtrend has resumed. This was 16 hours ago, sitting on support 3, but I scalped at that time of the day. Just waking up, I scalped some pips, and you can do that. You can see on the pullback, this is a green candle. That's where I sold, and the RSI was red, and it took profit, a scalping profit on the next candle. So right now it's sitting on support 1, oversold. The Aussie is not that strong, so I don't know how much more it would go down. If you use your crosshairs, see what the difference is between support 1 and support 2. That's 66 pips. So that's a pretty wide, with some Fibonacci targets in between. So it's very possible that this could keep going down, maybe just slowly, but the RSI in a 1-hour chart is pretty oversold. So it could be that price action is just slowed down so much. Here's a 30-minute chart, and you're starting to see a green candle, and the RSI is very oversold, so I would not even consider selling at the bottom until I see some kind of pullback. I would like to see a pullback up to the swing, which is exactly where the red resistance channel line is. If I were to consider selling this because the pound stays weak and the Aussie stays strong, I would have to wait for it to pull back to the swing line and start coming back down. That means the RSI line will be pulling it back to at least the 50% level as a green line, and then if everything happens at the same time, if price starts to come down after the pullback and the RSI turns red again and pushes past the 50% level, then I would go ahead and sell again. And my target would be support 2. So again, if it pulled back to the swing line and my target is support 2, that's 112 pips. And that might take several hours to happen, but as weak as the pound is, and if the Aussie dollar strengthens at all, then this could start going down very nicely. So this would be a pair I would keep watch on. You can watch this in a 15-minute chart, a 30-minute chart. When you see the pullback really start to happen in a 15-minute or a 30-minute chart, that you would drop down to the 5-minute chart in order to get a really great entry to sell again. So here we can see the retracement starting to happen. Look at the pound is starting to strengthen. It's strengthened to 1.3, and the Aussie hasn't changed. So we want either the pound to stay weak or weaker, or the Aussie to get stronger than this, and then this will start to come down again. So that's how you can use the currency strength meter to gauge your re-entry trades after a pullback. And you can use the chart at the same time with the support and resistance and the Fibonacci. And oh, let's see, my Japan trade, oh no, it says 0. Okay, so I put this on early this morning, the Japan indice. Let's take a look at my trade history for the morning before I even started this video. Here's the pound Aussie, my short little scalp trade, because it was already so oversold. So I didn't start trading until later in the morning. But I had some pretty nice little scalp trades, you can see. I even played the US 30 index, that's the Dow 30. And here's the gold, a little bit I made on gold. And here's my UK 100. I was messing around with the trade manager, so the trailing stop never kicked in, but it hit my profit, which was pretty nice. Same thing happened with my US 30 index. Actually, the US 30 index never places the stop loss and take profit, so you have to manually add those in. It's only the US 30 index if you're going to trade the US Dow CFD, and it hit take profit. And then my trades were pretty good during the morning. This is just a little tiny account that I use for making videos. Now, here's a profit loss info. This is an indicator that you get that tells you what your open trades are in the number of pips being profitable or negative. So right now, the Japan index is sitting at 0. I want to take a look at this. Okay, the RSI is very strong, and I bought, let's see, on this candle, it was a green candle at some point. Here it is on the 4-hour chart. You can see I bought at the top of the 4-hour candle. The RSI is very strong, but let's see what a potential target would be from resistance to resistance. So that's a 60-point potential trade, but my target, my take profit line, is actually higher than that. But the TM, the trade management or the trailing stop, will kick in before it ever hits that, and that can be a nice trade either way. And here it is on a 1-hour chart. On a 1-hour chart, I got in on a pullback, but the RSI was very strong, so it's going up, which is good. It's overbought in a 1-hour chart. And here are, I have target 2 and target 3. If it hits target 2, the trailing stop will kick in. So this is just a play trade, just to test my button settings, because we're on version 5 of this button, the buy, sell, close button. And we had to adjust it because of the CFDs. And the CFDs are the indexes. So the Japan index, it moves more around 8 p.m., 9 p.m. Eastern after the Japan market has opened. Right now we're at the tail end of the Japan market, and it's starting to move up a little bit. The UK 100, it really climbed this morning, and I was trading that a little bit earlier. Here's the Dow 30, the DAX. I was trading that. It's moved up really nicely. So while I've been making this video, I've missed out on making some nice buy trades in all of these indices. Here's the US 30, which is the Dow 30. It's moved up, and the US Tech has moved up. I played that this morning. The US 500 I played this morning, and everything's moving up. The gold versus the US dollar, we're in a daily chart, so it's way overbought. So it's probably going to be coming down a little bit, and the RSI is definitely turned down. So I was playing this in a lower time frame. And so those are the indices plus gold, and I don't usually trade oil. You can, but and gold I don't like to trade too much because it has these, look at this range, it's whipsaw, so that's still a 152 pip channel, this consolidation channel, and then it broke out. Last week gold really broke out to the strong side, and now it's in overbought territory with an orange hot dot, so it's possibly going to be coming down a little bit, but it's still prices above the green channel, so we'd still only be looking for buy trades at this point. So right now it's actually in a little pullback, and if it starts going back up to the upside and the RSI turns green and heads back up again, it's still pretty overbought, so the RSI needs to come down to the 50% and then turn back up, and then I'll start buying gold again. So at this point, let's take a look at this Japan index. It's really hit some kind of resistance here, so I think I'm going to just take my profit just to be out of that trade, because I don't really like to be in trades in the afternoon, especially with these indexes, because anything can happen. I think that I've explained most of the features of the Pro template and a little bit of an introduction to my new buy, sell, close button and the innards. And if you look, you can look and see what all of this is, and in another video I'll go into more detail. But just to use it, you have all of these step files that I've created for you already. So we have 2 day trade set files, a DAX, a gold, a Japan index, a quick scalp, and a swing, and then these other index settings. They're all refined for the individual indexes. However, the swing, scalp, quick scalp, day trades can be used for any of the currencies depending on if you've learned how to use your crosshairs and calculated what your potential target could be. You would choose that preset file that matches what your potential target is. If your potential target, like we were talking about, is support 2, use your crosshairs. You have a 72 pip or 70 pip potential target. Let's see, I would use, here's the first day trade, which your first take profit is 300. It looks like 300, but it's really just 30 pips. So we figured that the target down is 70 pips. So if we use this day trade, that first take profit would happen almost halfway through your target. Halfway through your target destination. The trailing stop would kick in halfway through, which is okay. So that would be a fine preset file to use. And here's day trade 2. So the target is 50 points, 50 pips rather. And your target is 79 pips. So somewhere around here on this Fibonacci target here, the trailing stop would kick in. And it would have to go past 50 pips in order for it to start trailing. So we don't know, at this point. We can tell by using our crosshairs what our potential target is, and then you go into your set files and you pick the one that best suits your target. So here's the scalping. First take profit is 200 pips. So the trailing stop moves in, kicks in when it's moved actually 20 pips. So you have to get used to using that extra 0. So this is really just 20 pips. So it will close 50% of your trade when it locks in 15 pips and then trail 10 pips behind this. So it's actually a difference of 5 pips. That's a very quick, that's a very tight trail, and it'll move your trailing stop 1 pip at a time. That's 10 is equal to 1. So now that I've thoroughly confused you, I'll do another video just on how to use the buy sell close button. I really like it. It's brand new for us. My coder made it and we've worked on it for weeks. And the preset files, I've been trading for so long that I pretty much know what quick scalp, day trade, swing trade should be. And the CFD preset files have been tweaked just for this button. Although I've been trading CFDs now for over 6 months. I enjoy trading the CFDs because right at 9:30 a.m. Eastern, when the stock market opens, some of these, especially the US CFDs, can really explode, but I always wait 15 minutes after the stock market is opened, and then I look at the charts, I analyze the charts, and I use the preset file which is pretty optimized. It's not absolutely perfect, but it's pretty optimized. But in another video I'll show you how to adjust the settings in the buy sell close button for the trade management for the trailing stop. So I can't think of anything else to say. I've been talking for a whole hour. I appreciate you sitting with me, and I hope that you learned something. And this will probably be my longest training video for the Pro CSM template. And my next video will be just to explain more in detail how to use the buy sell close button with the preset files and how to pick and choose which preset file you should use. Now, I've already touched on it by showing you how to use the crosshairs to determine potential targets. You have to know that ahead of time. So you need to learn how to use the crosshair and get in the habit of always using it, because it's part of your chart analysis, and I think it's very important. I don't know how you can choose a preset file, the proper one, unless you know what your potential target is. And because these Fibonacci lines are the same no matter what time frame that you're moving through, you can change the time frame. The Fibonacci support and resistance lines are synchronized through all the time frames, so they're going to be the same. So whether you're on a 1-minute chart or a 4-hour chart or a daily chart, your target for support 1 or support 2 or resistance 1 and resistance 2, for example, are going to be the same number of pips apart. It's not going to change depending on the time frame you're looking at. So that's nice because that gives you consistency and regularity you can count on or depend on. And so you know that if you learn how to use your crosshairs, you're always going to be able to determine your target, which is always going to be one of the Fibonacci support or resistance lines. And in between, you have this other little Fibonacci extension indicator that gives you smaller targets between, for instance here, between the support 1 and support 2. You have all of these smaller targets. So if price stalls out, if you've sold here and price stalls out on one of these smaller Fibonacci targets, you could actually manually take profit and close the trade anytime you want to, and not just totally leave it up to the trade manager. But if you can't be in front of your computer, the trade manager's wonderful and it will free you up. And if you learn how to refine your entries, learn how to start looking at the daily charts and just go down, 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 drill down to all the way even to the 1-minute chart, because 1 minute and 5 minute and 15 minute are where you're looking for your retracement so you can get the perfect entry. So you cannot get a good entry when you're trading in weekly, daily, or even 4-hour charts, because there's just too much happening and you cannot see the re-entries, you cannot see the pullbacks in those time frames. You have to go down to at least the 15-minute chart to look for your pullbacks. When you identify a potential pullback, then you jump down to the 5-minute chart so you can really watch it closer, really watching it, because you're waiting for the perfect entry. So if anybody emails me and tells me I can't get a good entry in a daily or 4-hour chart, well, you know, that means you have to learn how to drill down. You have to learn how to look for your retracements, and you have to learn how to trade your retracements, and you have to learn how to use your crosshair to determine your target. So those are very important lessons to be learned in Forex trading. This template makes it really easy to determine all of that. You just have to learn how to use it, and it will take some practice and a demo account. So thank you again for watching, and I have to stop this video because you know I can keep talking, but I don't really know what else to say at this point. And like I said, in my next video I'm going to be explaining the buy, sell, close button and the inner workings of it and how the trade management works. So again, thanks so much for watching, and have a great trading day, and we'll see you in the next video.